Hello and welcome back to Grade Academy. My name is Garret and I'll be reviewing business studies for the junior cycle. This is Unit 2, Income and Expenditure. The learning outcome for this unit will be identifying and classifying sources of income and expenditure, comparing options available to best manage your financial resources, evaluating the risks associated with each option, and making informed and responsible judgments. There are a few learning intentions for the unit. At the end of the chapter, you will be able to state the main sources of household income, distinguish between regular and irregular sources of income, explain benefit in kind, explain why tax must be paid on income, interpret a pay slip, calculate gross and net income, differentiate between statutory and voluntary deductions from income, differentiate between disposable and discretionary income, prepare and evaluate a household income plan, explain the difference between fixed, irregular, and discretionary spending, appreciate the need to prioritise expenditure, explain the difference between current and capital expenditure, define the terms impulse buying and false economy, prepare a household budget, household expenditure plan. So there are a lot of keywords in this unit. So there they are on the screen at the moment, and these will be explained in the video and the PowerPoint, and also they'll also be available on the Microsoft Word version of the notes, along with maybe a mind map, and there is definitely some exam preparation at the end. So, what is income? Income is the money or something of value received by a person or a household. It may be earned, for example, through paid employment, or unearned, for example, from a state benefit or child benefit. The income can be used to buy goods and services. So, all the different sources of income depending on your age. So, students earn money from pocket money, babysitting, birthdays, and other occasions. Third level students might have a part time job. They could get a grant or a scholarship from the government or another organisation, and they may receive money from their own parents and guardians. People of working age, from let's say 16 to 65, the pension age, they will receive a salary or a wage. There are a few other examples of income, sources of income for the working age people. Retired people over 65 get a pension, either from the government or from a private pension. The government also receives different sources of income: taxes, the sale of a state company, and EU grants. And down the bottom, there are other forms of income. Now, regular income and irregular income. Some sources of income are received on a regular or ongoing basis. It is certain that the household or the individual will receive this income, and it is usually paid at agreed intervals, such as every week or every month. Examples include wages, salaries, child benefit, pensions, job seekers benefit. Other types of income are less predictable and may be received only at irregular times, such as overtime bonus, inheritance, or a tax refund from the government, room for rent on Airbnb, a windfall, for example, winning the lottery. Irregular income is sometimes called additional income. So, I've made a list or a table here of sources of household income. On the left is the type, and then explained in more detail on the right hand side. So take some time to read this and familiarise yourself with the words and the definitions. Benefit in kind. Benefit in kind is a non money income in the form of benefits in kind, BIK, also known as perks, and they may be received when the household is provided with goods or services that have a money value, for example, a company car. Other examples of benefit in kind. An unemployed person may receive a medical card that entitles them to free healthcare. Students may apply for an international student identity card, which entitles them to discounts on different products and services. Retired people aged 66 and over receive a free travel pass that entitles them to free travel on buses, trains, and trams. People who are in employment may also receive non-cash forms of income from their employment. The following are examples of benefits in kind or perks that a person might receive from their work. So you can read over these examples of an employed person receiving benefits in kind. Now, income from employment. A salary is a fixed annual payment made to an employee no matter how many hours of work they do. A wage is a payment received for work done, normally calculated on the basis of actual work completed or on the amount of time spent working. Now, there are different methods of paying wages. So, wages can be calculated using a number of different methods, including time rate, overtime payment, piece rate, commission, and bonus payments. So take some time to read over these in the Microsoft Word version, or pause and rewind the video and look over the PowerPoint. Basic pay is the amount earned before any extra payments of overtime and bonuses are added. Gross pay is the sum of basic pay plus any extra income earned from overtime, bonuses, and commission. In other words, the total pay before deductions. Gross pay is equal to basic pay plus overtime plus bonuses plus commission earned. Net pay, also called take-home pay, is the amount left over from gross pay. Net pay is equal to gross pay minus total deductions. Take some time now to go over these in the video, the PowerPoint, or in the Microsoft Word version of the notes. Deductions. There are two types of deductions from pay. So, money taken away from your wages or your salary. There are statutory deductions. These are compulsory. Every worker is required by law to pay these. Voluntary deductions are not compulsory, but workers may choose to pay them. Now, the statutory or compulsory deductions are pay as you earn, PAYE income tax system. Under this system, tax is paid on income as it is earned. The more you earn, the more PAYE tax you will pay. Pay-related social insurance, PRSI for short, allows employees to claim certain benefits in the future if needed, for example, a state pension. So throughout your working life, you pay pay-related social insurance, and then when you retire, you can claim some money back. Universal social charge applies to all workers whose income is above a certain limit, and it is used to fund government spending. Now, the voluntary or non-statutory deductions, you have a choice to pay this or not. So, for example, you have a choice to pay a pension, health insurance, trade union fees, and savings. Now, disposable income. The remaining income after all income taxes and statutory payments have been made is called disposable income. Discretionary income, on the other hand, is the income left over after taxes and essential spending on items such as food and bills is called discretionary income, and you can choose how to spend it. Now, we have different, if we want to manage our income, we've got lots of different options. And I'm going to put up 5 options here for managing our income. We could earn some additional income by doing extra work, such as overtime or weekend work. There are risks, and we should make an informed and responsible decision. Option 2, we could borrow money from a financial institution, a money lender, or a family member. Again, there are risks. We should inform ourselves about making an informed and responsible decision with all these options on managing our income. Option 3, we could rent out a room in our house to a lodger, a foreign student, or with Airbnb. Again, there's going to be a risk, but we need to make an informed and responsible decision. Option 4, we could invest our money. Therefore, we could buy shares in a business and hopefully receive an annual dividend from the profits, or sell the shares when the price goes up. Again, there is going to be a risk, but we need to make that informed and responsible decision. And the last option, option number 5, we could gamble some of the money you have in the hope of a big win. There's going to be a big risk here, but make that informed and responsible decision. It is very important that we manage the income we will have in the future when we no longer have our traditional weekly or monthly income. We can do this in 2 ways. Pay into a pension plan that will provide us with an income when we retire. Pay into an income protection plan that will provide a regular income for us if we have to give up our job because we become ill. A responsible person will start paying into a pension plan as soon as possible after they start working in order to provide a good income for themselves when they retire. They will also take out an income protection plan in case they have to give up work due to illness. We do not know what will happen to us in the future, so a responsible person will never take it and "it will never happen to me" attitude. Now, expenditure, the second half of this unit. Expenditure is the amount of money spent during a particular period of time. Spending should be planned carefully. It is important to prioritize spending. This can be done by classifying expenditure under 3 headings: fixed expenditure, irregular expenditure, and discretionary expenditure. As with income, how we spend our money depends on the individual or the household needs and wants. How many are there in the house, and the age of the members of the household. Spending is dependent on the income being earned by individuals in the household too. Fixed expenditure. Fixed expenditure is the money spent at the same time each week, each month, or each year. The amount payable is usually fixed and does not depend on usage. Examples: a mortgage, rent, loan repayments, TV license, and car tax. Irregular expenditure means that the bill may or may not be paid at regular times, but the amount paid out changes. The more you use, the more you pay. For example, petrol. The more you drive your car, the more petrol it needs. The more you use your phone, the higher the phone bill. The more food and groceries you buy, the higher the grocery bills. The more you buy for school, the higher the bill. Discretionary expenditure, or spending on non-essential items, is money spent on things you want rather than you need. For example, luxury items. These items should only be bought if the money is left over after all the bills are paid. The amount varies. For example, Sky TV, designer clothes, holidays, takeaway meals, presents and gifts. Current expenditure versus capital expenditure. So current expenditure is repeated or ongoing day-to-day spending, for example, groceries. Capital expenditure, on the other hand, is a once-off or a long-term spending, for example, a new car. So here's an infographic from the Central Statistics Office about the percentages of spending in Ireland. So we can see here that 14.7% of all of our income is spent on food, 4% on clothing and footwear, 4.6% on fuel and light, housing nearly 20%, 2% on household and non-durable goods, 14.9% on transport. Now, we need a few guidelines for effective spending. So I've prepared a little chart here. Make sure that you prepare a budget. Prioritise the expenditure, avoid impulse buying, be aware of false economies, make sure you know the difference between the financial cost and the opportunity cost, and check over bills and invoices. Now, recording, planning, and household expenditure. Both income and expenditure can be recorded in an analysed cash book, in a spreadsheet, or other accounting programs on a computer. I will be looking over the analysed cash book in a future chapter. Planning expenditure. Planning is based on the best information you have available at the time. If something unexpected happens, you may need to review and change your plan. You could represent your planned expenditure in a chart form like this, like pie charts. So here we have the fixed expenditure broken down between mortgage, house insurance, motor tax, and motor insurance. Irregular expenditure, here we see household costs, car running costs, telephone, light and heat. And lastly, discretionary expenditure in a pie chart represented showing entertainment, presents, and holidays. Solutions to overspending. Cut back on spending, postpone non-essential spending, spread out larger payments over a longer period of time, use savings or surplus money from previous months, and generate extra income. Or you could borrow money. Managing our expenditure. So I'm going to give you 5 options here again to manage your spending throughout your lifetime. Option 1, shop around for the best value. Don't always go into the first shop and just be willing to pay. Shop around. There is a risk, but make that informed and responsible decision for your income and for your expenditure and managing your money. Option 2, spread your bills out over a year. You don't have to pay all bills at once. You can spread them out over installments. There's a risk, but make that informed and responsible decision. Option 3, cut out or reduce some items of expenditure that are not absolutely necessary. There's going to be a risk, but make that decision yourself. Option 4, buy online in order to avail of the cheapest prices available. Again, there's going to be a risk with buying online, which I'll refer to in a future chapter. Make that informed and responsible decision. And the last option is, once you have planned your expenditure, stick to that plan. There will be a risk, but make that decision based on all of the information. So, a recap and review of Unit 2, Income and Expenditure. Can you, at the end of the chapter, know the sources of household income, the difference between regular and irregular sources, benefit in kind, be able to calculate gross and net income, differentiate or show the difference between statutory and voluntary deductions, differentiate between disposable and discretionary income, prepare and evaluate a household income plan, ideas to manage household income, explain the difference between fixed, irregular, and discretionary expenditure, appreciate the need to prioritise expenditure, explain the difference between current and capital expenditure, define the terms impulse buying and false economy, prepare a household expenditure plan, and some ideas to manage your household expenditure. Thanks very much for listening, and I will see you all in Unit 3. Again, all the extra information and exam preparation will be available in the Microsoft Word version of the notes that are attached. Thank you very much.